Why do so many traders fail? You know, it's a question that kind of haunts the industry. But the answer? It might actually surprise you. It's almost never about a flawed strategy. It's because they're missing the single most important document for survival, a real business plan. So let's dive into what that really means.
This quote from baseball legend Bill Terry, man, it just hits the nail on the head, doesn't it? Trading isn't a hobby. It's not a game of chance. It is a high-stakes business. And just like any other business out there, its success or failure really hinges on one thing: management.
So this is the real gut check question you need to ask yourself right now. Are you just clicking buttons, reacting to every little market wiggle? Or are you the CEO, the manager of your own trading business? Seriously, the answer to that question is going to define your entire career.
Okay, so let's get to it. Let's build your business. And the very first department we need to establish is focused on one thing and one thing only: survival. Forget about profits for a moment. Your number one job, especially in the beginning, is simply to stay in the game.
See, survival in trading has two sides. There's the obvious one, financial survival, which means protecting your capital, your cash. But then there's also personal survival, and this one's huge. It's about maintaining the passion and the mental strength to show up every single day, especially after you take a loss. You absolutely need both to succeed.
All right, let's start with your financial armor. And this is not about complex formulas or anything like that. It's about a simple, non-negotiable set of rules that protect your business from a catastrophic failure. Think of this as your company's official risk management policy.
In fact, your entire financial survival plan can be boiled down to just 3 critical numbers. And listen, these aren't suggestions. They are the hard and fast rules that will keep your business solvent.
Number 1 is 1%. This means no single trade should ever risk more than 1% of your total account equity. This is so important because it ensures that one bad idea or one unlucky moment can never ever put you out of business. It is your first line of defense.
Number 2 is 3%. Think of this as your circuit breaker for a bad day. If your account drops by 3% in a single session, you stop. Period. You walk away. This is what prevents a losing streak from turning into a downward spiral driven by pure emotion.
And the third number is 20%. This is your ultimate safety net. If your account ever draws down by 20% from its peak, you must stop live trading. You halt operations, you go back to the simulator, and you figure out what's wrong without losing everything. This is how a CEO protects the entire enterprise.
And look at this. This is what a successful equity curve actually looks like. And it proves why those rules are so powerful. It's not a straight line up. See those dips? There are losing periods. But because risk is strictly managed, the business survives the downturns and continues to grow over the long term.
With our risk management policy in place, let's move to the next department in our business. A professional doesn't just manage known risks, they plan for chaos. This is your contingency management department, and it's all about preparing for what will inevitably go wrong.
So what is contingency management? It's your what-if playbook. It's a pre-written plan that details exactly how you'll respond when things break, so you're not making panic decisions in the heat of the moment. You're simply executing a procedure.
The process itself is incredibly simple, but so effective. First, you brainstorm every possible thing that could go wrong, every threat, every potential error you can think of. Second, you write down a clear, step-by-step procedure for how you will handle each one.
And what kind of threats are we talking about? Well, things like your internet going down mid-trade, or making a mistake in entering the wrong order size, or even just recognizing you're trading from a place of stress or anger. By having a protocol for these, you're not just reacting, you're executing a pre-approved business procedure, and that neutralizes their power to cause major damage.
Now we come to the most challenging department to manage, and it's the key to that personal survival we talked about. This is human resources, and in this case, the only employee is you. It's your own psychology. This is where most traders truly struggle, but there's a professional way to manage this too. The author of our source material, Lance Beggs, is a former military helicopter pilot. He approaches trading with the same life-or-death discipline as aviation. I mean, a pilot would never take off without a pre-flight checklist, so why should a trader enter the market without a plan? So, how do you manage the fear and greed that can derail your performance? The key isn't just positive thinking. It's a complete shift in how you define a successful day. It's all about changing what you measure. Here's the critical difference. Amateurs set outcome goals, like making a certain amount of money. But you can't control the market, so this just creates stress.
Professionals, on the other hand, focus on process goals, things they can control, like following their rules perfectly. A successful day becomes one where you execute your plan flawlessly, regardless of the profit or loss.
So when you put all these pieces together, the survival mindset, the financial armor, the contingency plans, and the focus on process, you stop being just a trader. You undergo a transformation.
You are the chief executive officer of your own trading business. You are responsible for risk management, operations, and personnel. Your job isn't to guess the market's next move. It's to manage your business so that it can thrive in any market condition.
So I'll leave you with this question. Now that you have the blueprint, you're no longer just a trader. You're a founder. So what's the first department you are going to build for your business? Will it be risk management, contingency planning, or mastering your own psychology? The choice is yours.